As the summer comes to an end and we close out the third quarter of 2023, there are unanimous questions buyers and sellers are asking before they make a move. Maybe you're thinking about it too. Stay tuned and we'll dive into it together. It's Christopher Marr with MMG Real Estate Advisors, and I've been selling Orange County real estate for over 30 years. Now let's get to it. These are the most asked questions today. Do you think interest rates will continue to rise? And how did we get here? With affordability at an all-time low, is there any good news for first-time buyers looking to get into the market? When will inventory increase? A question many are asking. Lastly, why do so many social media platforms continue to push doom and gloom despite the facts? All great questions. First, before we address rates, let's briefly review how we got here today. The government injected $12.7 trillion into the U.S. economy since 2020 in the form of, first, $5.2 trillion in COVID relief, which increased the money supply by 27% and did so very quickly. The floodgates were open. Keep in mind, money supply typically grows at 7% per year. Second, $4.5 trillion for quantitative easing. This provides liquidity in the financial system. QE increased the money supply by 14% per year over the past decade. Lastly, $3 trillion for infrastructure, and all of this totaled $12.7 trillion. Mountains of money cause inflation, and if diligent monetary policy actions aren't taken, well, hello, runaway inflation. This is when too many dollars are chasing too few goods. This 5-year chart shows inflation in 2018 and 2019 near the Fed's target rate of 2% before falling well below 2% in 2020 with the nation on COVID lockdown. Now, many economists believe the government's failure to take diligent action in 2021 contributed largely to runaway inflation that ultimately peaked at 9.1% in June of 2022. The Fed could no longer hold the line on rising inflation being transitory. So in March of 2022, despite the political blowback, they were forced to accept that rising inflation was not transitory. And in March of 2022, the Fed began what would become the most aggressive series of rate hikes since the 1980s. Now that's a brief overview without getting too deep into the weeds. Now for rates. Since the initial 25 basis point increase to the Fed funds rate in March of 2022, the Fed has raised the Fed funds rate 11 times by 525 basis points or 5.25%. The Fed meets next on September 19th and 20th to determine if the economic data warrants yet another hike. The August economic indicators showed some encouraging signs, and we saw mortgage rates dip from their high of 7.5% to 7.06% in August. Mortgage rates have inched back up slightly in September with the anticipated release of key economic reports that will influence the Fed's decision on whether to raise rates or not. Inflation has trended down every month since June of 22's high of 9.1%, with the exception of this July, when it increased from 3% to 3.2%. We expect mortgage rates to decline when there's compelling economic data to suggest the economy is cooling and inflation is trending downward towards the Fed's target rate of 2%. We break this information down every month. If you find this information insightful, give us a thumbs up and subscribe. Secondly, affordability has been impacted significantly by rising interest rates, hitting highs that we have not seen in 23 years. This isn't just about mortgage rates and higher payments when buyers are determining what they can afford, but other expenses that will need to be considered, like higher financing rates for cars or other large purchases with which credit cards are often used. A fascinating trend has been taking shape for a few years now and is providing a pathway to home ownership that is allowing first-time buyers to achieve what many see as an elusive dream today. It's so powerful that move-up buyers are excited about it as well. Brooks and I have made a video that goes into much greater detail than we can in this video. You can find it here in the top left corner or in the description below. We also wrote an ebook that you can download for free. We were amazed at the number of downloads, especially from CPAs and financial planners. Now, thirdly, inventory is not expected to grow in the short term, as many homeowners continue to find comfort in their historically low mortgage rates, and many with significant equity positions. These homeowners have mortgage payments significantly lower than what their homes would rent for today. Another reason sellers are under no pressure to place their homes on the market. This mortgage rate chart shows the percentage of outstanding mortgage rates held by U.S. homeowners and California homeowners. It's not hard to see while the inventory is near historical lows. The reality is the Fed will have to pivot on their rate policy before inventory begins to increase, or if there should be a significant financial downturn. But the economists say that current economic data doesn't support that. Now, recently I've heard discussion on some ideas I think would be a game changer. Could you imagine what things would be like with these low rate mortgage rates were assumable? Or even better, mortgage porting became more prevalent in the US. This is when you can transfer your current mortgage rate to your next property. We have a great video that goes into detail on both of these topics, and it's one definitely worth watching. Lastly, the doom and gloomers are always going to be there because we are conditioned to pay attention to things that may impact our lives in a negative way. Now, the more serious they may impact our lives, the more seriously we pay attention, and that means clicks, unique views, shares, etc. All things that the social media algorithms love, which in turn generates ad revenue on various social media platforms. It's no secret, while feel-good stories don't lead the evening news. Also, I find many times conflicting content buried deep in the article that contradicts the doom and gloom headline. This is done by design because the longer you're engaged, the more the algorithms like it. I watched a doom and gloom video on YouTube and read the description below. It stated, "This video is for entertainment purposes only, and not all information has been verified." This was their disclaimer. We recommend that you look for trusted sources that take the time to research factual data and present it in their videos and posts. We in no way mean to suggest that you shouldn't be cautious when buying or selling a home. And we understand that buyers and sellers situations can be uniquely different. This is why we present our reports, videos, newsletters in more of a general sense. We provide a much deeper dive in our personal consultations with clients after we understand what their personal real estate objectives are. Well, that's a wrap on this video. If you have any questions about anything said in this video or something you read online, feel free to drop us a comment, give us a call, text, or shoot us an email. We are here to help you navigate the home buying and home selling process and be a trusted resource that you can rely on. If you feel there is someone you know that can benefit from this information, give it a share. And until next time, thanks for watching, and we'll see you on the next video.